The impact of coronavirus pandemic on the global, African and Nigerian economy. Here are the following updates we have at the moment. At the global level, the confirmed cases are 5,631,831, while 348,965 deaths have been recorded, while 2,399,258 people have recovered. Africa's confirmed cases are 116,423, with 3,494 deaths and 46,772 recoveries. In Nigeria, the confirmed cases are 8,068, with 233 deaths and 2,311 recoveries. Let's begin our stories that we have at the moment. In the United States of America, the government, which first rolled out forgivable loans to small businesses in early April under the Paycheck Protection Program, loan officers at Bank of the West in Grapevine, Texas, work nights and weekends to process a tsunami of applications. But since those first few frantic weeks, demand has just dried up, said Bank President Cindy Blankenship. On May 15, the bank stopped taking applications for PPP loans. Nationally, the program remains active, but data from the Small Business Administration shows net weekly PPP lending has actually been negative since mid-May, as fewer firms applied for loans and some borrowers returned funds. All told, the SBS says it had approved $512.2 billion in PPP loans as of May 21st. That's nearly $150 billion less than $660 billion allocated to the program, which was designed to keep Americans on company payrolls and off unemployment assistance. Many of Bank of the West's PPP borrowers haven't touched their PPP loan deposits, which total $87 million, Blankenship said, partly because they are confused about the terms. I think it's a mixture of uncertainty and anxiety and fear and the uncontrollable factor about employment and rehiring. The money left unborrowed and unspent under the program, a flagship of the Congress' $2.9 trillion effort to cushion the economic crush of the coronavirus pandemic, represents a lost opportunity. Businesses were supposed to use it to retain workers, but may have been laying them off instead of tapping the money. Some 38.6 million people have filed for unemployment insurance since the crisis began, and the unemployment rate is expected to near or surpass the 25% record reached in the Great Depression of the 1930s. Still in the US, the consumer confidence nudged up in May, suggesting the worst of the novel coronavirus-driven economic slump was probably in the past as the country starts to reopen, but it will probably take a while to fully dig out of the hole amid record unemployment. The conference board said today its consumer confidence index edged up to a reading of 86.6 this month from a downward revised 85.7 in April. Economists polled by Reuters had forecast an index rise to 87.5 in May from the previously reported reading of 86.9 in April. Macy's Incorporated said today it planned to raise $1.1 billion in a bond offering backed by a first mortgage on some of its properties to repay funds borrowed under a revolving credit facility. The department store chain drew down a $1.5 billion credit facility in March as it had to temporarily close stores and limit its business to its app and website due to the COVID-19 pandemic. A number of U.S. companies are also pledging their assets and properties to raise money and clear debt as businesses reopen after a long government-mandated lockdown. The senior secured notes are due 2025. In France, President Emmanuel Macron has said support for the French car sector hard hit by coronavirus lockdown will be massively amplified. The health crisis massively and brutally brought the French car sector to a halt. This is a part of our economy, thousands of jobs, President Macron said via his social media Twitter handle. France is due to announce a support package for car makers, the latest industry to get a sector-specific recovery plan. In South Africa, the mining production is likely to fall between 8% and 10% this year due to the COVID-19 pandemic. The CEO of industry body, the Minerals Council, said today during a virtual panel discussion. Mines across South Africa, the world's biggest producer of platinum and chrome and a leading producer of gold and diamonds, were forced to shut temporarily when a COVID-19 lockdown started in late March. Harmony Gold CEO Peter Steenkamp said it would take a month for its mines to fully ramp up from June 1st, when the country further eases its lockdown, allowing all mines, including deep-level operations, to work at full capacity. Steenkamp said he did not expect Harmony's acquisition of Anglo Gold's Ashanti's Mponeng mine to be completed before the end of July. Some 196 workers at Mponeng have tested positive for COVID-19, causing the mine to shut down. We go on a break, and when we return, we'll continue with developments in Nigeria. Welcome back. From the Ministry of Budget and National Planning in Nigeria, we get you the medium-term economic framework assessment. Looking at the performance of the economy, it says the economy has grappled for acceleration in real gross domestic product growth since the exit from recession in second quarter 2017. In spite of 11 consecutive quarters of positive growth, GDP growth remains below desirable targets, growing below population growth rates. Prior to the outbreak of COVID-19 pandemic, the Nigerian economy had been characterized by wavering external sector and improving internal economic indicators. Over-dependence on oil revenue, constrained fiscal space, low foreign and domestic investments, and declining foreign reserves made the economy disproportionately vulnerable to the twin shocks of crude oil price and production collapse and a health crisis. The informal sector, which amounts for over half of Nigeria's gross domestic product, will be negatively impacted by this. From the monetary space, there has been a continued uptick in headline inflation year on year for the 7th consecutive month to 12.26% in March 2020 from 11.02% in August 2019. The rising inflation was largely attributed to increases in the food and core components, which rose to 14.98% and 9.73% in February 2020. From 13.17% and 9.7% in August 2019, respectively. Furthermore, the surge in demand for food produce in anticipation of the lockdown have further contributed to the hike in inflation rate. The central bank has adopted measures to rein in inflation by managing excess liquidity in the banking system, which is also aimed at reducing pressure in the foreign exchange markets, with resultant depreciation of the naira. From the external sector, Nigeria's foreign reserves has declined to $35.9 billion in March 2020 from $44.7 billion in April 2019. The decrease is largely attributable to the impact of the decline in crude oil receipts. Monetary policy rates have been relatively unchanged with the goals of supporting growth and employment and checking capital outflows to support external reserves accretion. The uncertainty and general decline in global economic activities caused by the COVID-19 pandemic have further dimmed the prospect of reversing the downward trend in foreign portfolio investments in the Nigerian Treasury bills, also adversely impacted by the COVID-19 inspired flight to safety, represent the second biggest source of dollar inflow into the country after crude oil. Fiscal buffers are very lean, with external debt standing at $26.94 billion and excess crude account barely $71 million. Balance of trade at $18.7 billion and widening fiscal deficit on account of lower oil revenue. The fiscal space is critically constrained. Tax as a percentage of the gross domestic product is 8% and has been suboptimal, while debt service to revenue is at over 50%, high and worsening. Government is seizing the opportunity of the crisis to intensify economic diversification to ensure a growth in non-oil exports, reduction in the import bill, and improving competitiveness. Nigeria is currently implementing a modest stimulus package and providing palliatives for the most vulnerable members of the society. From the National Bureau of Statistics, we bring to you the capital importation report for first quarter 2020. It says the total value of capital importation into Nigeria stood at $5,854.38 million in the first quarter of 2020. This represents an increase of 53.97% compared to fourth quarter 2019 and minus 31.19% decrease compared to the first quarter of 2019. The largest amount of capital importation by type was received through portfolio investments, which accounted for 73.61%, $4,309 million of total capital importation, followed by other investments, which accounted for 22.73%, $1,330 million of total capital, and then the foreign direct investment, which accounted for 3.66%, totaling $214.25 million of total capital imported in first quarter 2020. By sector, capital importation by banking dominated first quarter 2020, reaching $2,990.21 million of the total capital importation in first quarter 2020. The United Kingdom emerged as the top source of capital investment in Nigeria in first quarter 2020 with $2,908.62 million. This accounted for 49.68% of the total capital inflow in first quarter 2020. By destination of investment, Lagos continued to emerge as the top destination of capital investment in Nigeria in first quarter 2019 with $5,135,049 million. This accounted for 87.72% of the total capital inflow in first quarter 2020. By bank, Standard Chartered Bank Nigeria Limited emerged as the top of capital investment in Nigeria in first quarter 2020 with $1,656 million. This accounted for 28.30% of the total capital inflow in first quarter 2020. And that's the report for the capital importation summary. You can follow further updates on our website. And that will be all for this evening's edition of the COVID-19 update. You can visit our website, www.proshareng.com, to get more updates and news stories and reports on our site. Also, Debtors Africa is alive and very active. All you need to do is to log on to www.debtorsafrica.com. That's a game-changing platform talking about risk management, debt recovery, debt management. This period, we'd like you to also follow our social media platforms displaying on the screen to get all the updates that you need from ProShare. Till we come your way again, thank you for watching. Have a nice day and stay safe.